Hello and welcome. Good morning. You're tuned into Market Cafe. I'm Ankita Saxena. With me is Shrishti Sharma. The next 1 hour, we'll take you through all those cues that you need to watch out for before the start of the trading session today. And first, of course, we start with the Wall Street and how that fared. And of course, Wall Street saw a sea of red, sharp cuts coming in on the Wall Street. Dow Jones fell almost 739 points in the trading session. S&P 500 was down 1.5%, and the Nasdaq slipped as much as 1.8%. Yesterday, and I remember oil has remained elevated. In fact, it closed at $100 a barrel, and that has really spiked the inflation fears. And on the back of that, we do see these sharp cuts coming in. In fact, the Supreme Leader of Iran has also mentioned that the Strait of Hormuz should remain closed. And on the back of that, of course, there is a lot of chaos as far as the oil prices are concerned. That is weighing heavy on the inflation fears, and that saw its effect coming in on the Wall Street as well. And so that's how Wall Street also ended sharply lower. Also, if we look at the futures as of now, even the futures right now, we are also waiting a key U.S. inflation data. The report comes as surging oil prices, in the wake of Iran war that continues to weigh on the stocks. But futures for Dow Jones Industrial Average is nearly down 0.2%. S&P 500, though has ticked up slightly, 0.1% uptick coming in, and Nasdaq is trading very, very flat as of now. So that's how this market setup looks like. And look at the implied start to Nifty also. 167 points cut is what we're expecting on a Friday morning, Shrishti.
Yes, absolutely. And sharper cuts on the U.S. markets. As of now, some bit of a breather is what the U.S. futures are seen to be taking. But let's also tell you what the energy market is doing. And yes, the crude is on the boil just yesterday and overnight as well. We have seen a 9% jump coming in on crude oil prices. And as of now, crude is still hovering around that $100 per barrel mark when it comes to Brent oil prices. When it comes to WTI, that level is close to $95 per barrel mark. But yes, of course, the Strait of Hormuz to remain closed. That's the big commentary that is coming in on crude oil prices. The inflation fears are definitely there, but the tanker disruptions is definitely one of the key factors that is keeping the crude prices elevated. Even we also had interesting comments coming in from Donald Trump, where he actually said that, yes, of course, the crude prices are elevated, but that is important. But other than that, the other fact of the matter to be marked is the kind of things that Iran has been doing. So some steps are being taken on that particular front. But talking about gold, that is seen to be rebounding after 2 days of fall amid uncertainty. As of now, even gold as well as silver, they are trading flat as we speak right now. So that's the check coming in on commodity market.
All right, so that's how the commodity market is shaping up. But let's talk about, of course, the big geopolitical news on US and Iran as Iran continues its unrelenting attack on shipping traffic and energy infrastructure, raising concerns over the supply of energy and fuel. And Iran's supreme leader has given a message that they won't relent. In his first address after being elected, Iran's supreme leader Ayatollah Mojtaba Khamenei has said that the leverage of closing the Strait of Hormuz should be used, and Iran's attack on Gulf Arab neighbors will continue. He vowed to avenge those killed in the war, including in a strike on a school. He said that Iran would obtain compensation from its enemies, referring to the United States. He says that if US refuses, Iran will take from its assets or destroy them to the same extent. Meanwhile, Iran hit a container ship off the coast of Dubai, causing a blaze near the Bahrain's international airport, targeted a major Saudi oil field with a drone, and forced Iraq to halt operations of all its oil terminals after attacking the port of Basra on the Persian Gulf.
Moving on to another story, and amid surge in the Brent crude due to the West Asia war, Trump administration is set to suspend Jones Act to tame oil price. The Jones Act, Merchant Maritime of 1920, is a U.S. federal statute requiring that all the goods transported by water between U.S. ports be carried on ships that are U.S. flagged and U.S. built and owned and crewed by U.S. citizens. Now, it aims to support the domestic maritime industry and ensure national security. But earlier, Trump had posted on Truth Social, the United States is the largest oil producer in the world by far, and when oil prices go up, we make a lot of money. But of far, a greater interest and importance to me as president is stopping an evil empire, Iran, from having nuclear weapons and destroying the West Asia. And indeed, the world, I won't ever let that happen.
And tensions in the Persian Gulf are escalating with 3 more foreign vessels struck near the Strait of Hormuz overnight. 2 oil tankers caught fire near Iraq's Qasr port while a container ship was hit near Dubai's Jebel Ali, forcing shipping traffic through the choke point to almost stop. Iran has warned oil could reach $200 a barrel.
And the US Navy will escort oil tankers through the Strait of Hormuz as soon as militarily possible. Now, according to US Treasury Scott Bessent, the move comes as the Hormuz shipping lane remains effectively shut amid the Iran war, sending oil prices sharply higher. Washington says a US-led or international naval coalition could secure the tanker passage through the strait even as Iran new supreme leader insists the choke point must remain closed.
And the United States had temporarily allowed purchase of Russian oil already at sea in a move aimed at establishing the stabilizing of global energy markets. Treasury Secretary Scott Bessent said that the exemption is a narrowly tailored short-term measure that applies only to cargoes already in transit. The waiver covers the Russian crude already that's loaded, with transactions allowed until 11th of April, as Washington tries to ease the supply stress during the Iran war.
And the United States and its allies clash with Russia and China at the United Nations over Iran's nuclear program as tensions around the war escalate. Washington accused Moscow and Beijing of blocking sanctions enforcement to protect Tehran, while the UN Security Council voted 11-2 to allow the discussions to proceed. Now, Russia and China pushed back, accusing the US of escalating the crisis and using the nuclear issue to justify military action against Iran.
And Trump has renewed calls for the Federal Reserve to cut interest rates immediately, even as Iran war pushes oil prices higher. Markets are betting the opposite, with rising crude prices fueling inflation fears and pushing the expectations for rate cuts further out. Future market now price barely one rate cut this year, as analysts warn that energy stocks could push the inflation much higher. And he also highlighted that his first term had the best economy ever and that the military is doing excellent working in Iran. Let's listen in.
At a time, we had a very successful first term, best economy ever. We did a lot of great things. We rebuilt our military. That's one of the reasons we're doing so well now with our military. I never thought I'd have to be using it so much. But when you look at what they did in Venezuela and now what they're doing in Iran, it's been amazing. But when you look at all of this, everybody was saying that this could never be done with the drugs. It could never be done. And in my first term, I was so proud of myself because I was able to cut the drugs 1/4 of a pence. Now, this doesn't sound so good, but I was proud. 28 years, drug costs went up, and it never stopped. Went up, up, up. And I had, in my third year, I cut drugs by 1/4 of 1%. And it was like a big deal because that never happened before. And I had a news conference. I announced that I cut drugs 1/4. It's the first time in 28 years. But now I cut drug prices by 80%, 75%. A low one, a bad one, would be 50%.
An MEA spokesperson Randhir Jaiswal confirmed that 3 Indian nationals have lost their lives in this war, while 1 Indian crew member is currently missing. One of the Indians was killed in a strike on a US-owned ship. Let's go across and listen in.
As he said, that we've lost so far 3 Indian nationals, and the 4th Indian national is missing. All these 4 nationals were part of crew on board merchant ships plying in the area. Our embassies in Oman and Iraq and our consulate in Dubai are working with local authorities to have their mortal remains transported back to India at the earliest. Let me also add that this is also the reason why India strongly condemns the attacks on merchant ships from any quarters. The latest casualty of an Indian national happened on board ship Safe Sea Vishnu, which is a Marshall Island flag vessel. This happened close to Iraq. There were overall 28 crew members, of which 16 were Indian nationals, but we lost 1. So 15 Indian nationals have been rescued and they have been taken to Basra. Our embassy in Baghdad is in touch with them and is offering all assistance. The one Indian national who passed away, we convey our deepest condolences, and we'll see how best we can have the mortal remains transported from there to India.
And in the weekly briefing, spokesperson of Ministry of External Affairs, Randhir Jaiswal, has also given details of India's efforts amid the West Asia war. MEA has shared details of communication between S. Jaishankar and his Iranian counterpart, and has also given details of rescue efforts taken in Iran so far. Let's listen in.
Foreign Minister of Iran have had three conversations in the recent days. The last one discussed issues pertaining to safety of shipping and India's energy security. Beyond that, 9,000 Indian nationals or thereabout who were there or who are there in Iran. These 9,000 Indian nationals comprise students. They also comprise seafarers, some business people, some professionals, and some pilgrims. Of these 9,000, you would have seen that we had issued an advisory some time back. Our mission had issued our advisory. Following those advisories, which were issued on 14th of January, if I'm not wrong, and 23rd of February, several Indian nationals, mostly students, a lot of students, they left the country and reached home. We have recently, as you know, we have shifted several Indian nationals, including students and pilgrims, who were based in Tehran to other safer locations and cities in the country.
All right, and moving on, and India's Civil Aviation Ministry has just announced that flight operations between India and Riyadh have resumed from March 12, restoring connectivity after recent disruptions. Now, on the first day of resumption, 3 flights are being operated to Mumbai by Air India and Indigo, while Air India Express is operating 1 service to Calicut. Now, the ministry also highlighted that over 1.5 lakh passengers travelled from Gulf countries to India between February 20th and March 11th. And for today, Indian carriers have scheduled 57 inbound flights from multiple West Asian cities, including Abu Dhabi, Dubai, Muscat, Riyadh, and Sharjah, subject to operational conditions.
And PM Modi has spoken with Iranian President Masoud Pezeshkian, who's amid the escalating West Asia conflict. Modi expressed deep concerns over the rising tensions, civilian casualties, and the damage to the infrastructure, while stressing that the safety of Indian nationals and uninterrupted energy supplies remain India's top priority. The PM has also called for a dialogue and diplomacy, reiterating India's commitment to peace and stability in the region.
All right, but with this, it's time to slip into a very short break. Don't go anywhere. We'll be right back on the other side.
Welcome back here to India Market Cafe. We're taking you through all the cues that you need to watch out for, and let's talk about the Asian handover and how that looks like. Well, Asia Pacific markets have also opened up lower, of course, taking a cue from the Wall Street and the elevated oil prices and the war that's going on, and there's no visibility as to when it's going to end. And now on the back of that, we do see global markets taking a tumble. As of now, if we speak of the markets and how the markets are shaping up, Nikkei is down 0.7% right now, 400 points cut coming in. Hang Seng is down 0.3%, 90 odd points down. Shanghai is also trading with cuts of 0.2%. It is only ASX 200, S&P 200 that is trading in the green, albeit very, very marginally. It is trading flat with a shade of green. To a 26 points uptick is what it's seeing. But it is a sea of red because of the elevated oil prices and the ongoing war. And implied start to Nifty is also indicating a cut of more than 150 points. A gap down start is what Indian markets is also penciling in on Friday morning.
All right, so that's about the Asian market check. But just yesterday, even Indian markets ended lower for the second straight session, with Nifty slipping nearly 1% amid the broad-based selling across sectors. Let me take it across to my colleague Ashesha, who joins in with more on how the markets flared yesterday. Ashisha.
Well, yes, yesterday was a weak session and as Ankita was pointing out, it looks like it will be another weak session today as well. Nifty ended nearly 230 points lower. It ended below that 23,700 mark in yesterday's trading session, and Nifty Bank 2 slipped nearly 650 points in yesterday's trading session. Several individual stocks and sectors in focus, but let's first talk about the auto sector, because Nifty Auto Index was the biggest sectoral loser in trade yesterday. We had the likes of M&M, Aisha Motors, Ashok Leyland, Tata Motors, PV, all of them among the top losers from the Nifty 50 pack. On the gaining side, we had select few stocks. Something like Coal India was bucking the trend in an otherwise weak market. Jio Financial and a couple of gas stocks were also gaining in trade yesterday. Remember, Adani Total Gas at one point in time surged as much as 13%, but it ended nearly 5 to 6% higher in trade yesterday. Other than that, we had induction cooktop stocks which continued to remain in focus yesterday. Something like TTK Prestige on the back of gas shortage aiding induction cookware demand in the domestic market. So this is the reason Stovecraft and TTK Prestige have been in focus for the last two trading sessions. We also had Swiggy and Zomato in focus on the back of lower ordering for both these food delivery platforms because of gas and LPG shortage in the domestic market and for several hotels and restaurants in the metro cities. So yes, several individual stocks were in focus, but Nifty ended 230 points lower, below that 23,600 mark, and GIFT Nifty is suggesting another muted opening this Friday morning.
All right, let's move on and talk about all the stocks that will be in focus in today's trading session. And for that, my colleague Karan is now joining us. Karan, tell us all the stocks that will be in focus.
Well, starting off with Balaji Amines, ammonia supply disruption and LNG shortage has led to non-availability of a key raw material, and this is set to impact its total amines or derivatives capacity of 231,000 metric tons per annum. So do watch out for that. Next, we have Gandhar Oil Refinery India. Due to the Middle East geopolitical tensions, that has caused 20% surge in the base oil prices. The company says that it is managing the risks via inventory, pass-through pricing, forex hedging, and diversified suppliers. Next, we have two companies charging ahead towards fundraising plans. The first company is Max Financial Services. The company has approved fundraising worth 2,000 crores via QIP, and this is primarily to meet the funding requirements of Axis Max Life Insurance to support its business growth and expansion plans. And the next we have is Manorama Industries. The board has approved the fundraising of up to 500 crores, again via a QIP, and this will support increasing the production capacity to 52,000 metric tons per annum. And finally, we have Biocon. The company's subsidiary Biocon Pharma has received US FDA approval for ANDA of injection to treat type 2 diabetes. Remember, the company's portfolio also includes novel first-in-class oral insulin for type 2 diabetes.
All right, thank you so much, Karan, for all those details. But that's not it. Let me take it across to Meryl, who's standing by with more list of stocks to be washed out today. Meryl.
Yes, let's take a look at some more stocks that are going to be in news today. Starting up first with JK Lakshmi Cement. The company has been declared the preferred bidder for limestone mining blocks in Assam. And these two blocks here span across 405 hectares, supporting the company's raw material supply. Also in news today is Action Constructions Equipment after the company signed a 50-50 joint venture with Japan's Kato Works for technological collaboration and manufacturing of equipments. In the real estate sector, Kalpataru Limited is in focus today after signing a redevelopment project in Mumbai's Andheri with an estimated gross development value of around 1,400 crores. Also in focus is Godrej Properties after acquiring a 44-acre land parcel in Coimbatore for a plotted development project which brings a top-line potential of around 450 crores to Godrej Properties. In the renewable space, KPI Green Energy is in focus today after adding a 35 megawatts of peak solar capacity, taking its operational IPP capacity to 589 megawatts. The company is slowly moving towards its target of a 2.17 gigawatt peak portfolio in this area. Finally, on our list is Small Cap World Fund after its increase in its stake in Shelley Engineering Plastics by a little more than 2%, buying at about 1,878 per share.
hang in there, Meryl, because you also have the cues to watch out for, and we need to keep on our radar besides the stocks. Tell us, what are the cues to watch out for then?
Well, yes, here's a bunch of cues that you should watch out for before the next trading session. Starting with global macro data from the United States, markets will be tracking consumer income data, the PCE price index, GDP numbers, as well as the JOLTS job openings reports. These are all important indicators of the outlook on growth and inflation, so that's going to be an important one to watch out for. From the United Kingdom, industrial production as well as trade balance data will be in focus, while the Eurozone releases its industrial production numbers. Coming back to India, we've got a lot of corporate actions and board meetings lined up. KRN Heat Exchanger and Refrigeration will be holding a board meeting to consider equity or equity-linked fundraising, while Repco Home Finance will be discussing a fundraise of about 125 crores. Meanwhile, Websol Energy Systems will also be reviewing share allotment and warrant conversion, and eClerx Services will be trading X bonus in the ratio of 1:1. In other news, the Reserve Bank of India will be conducting an open market operations purchase of government securities, aiming to infuse around 50,000 crores into the banking system. So yes, that was a quick rundown of all the important cues to watch out for before the next trading session.
All right, thank you so much, Meryl, for getting us all those details. We'll watch out for all of that. But with this, time now to step into a very short break, and we'll be right back. Welcome back to Market Cafe right here on ET Now, and let's put the spotlight on the inflation data, because India's retail inflation has inched higher in February as MOSPI releases the February CPI data, and CPI inflation rose to 3.2% in February 2026, up from 2.75% in January. Food inflation also edged higher, while rural inflation came in slightly above the urban levels. Now, despite the uptick, inflation remains within the RBI's comfort band of 2 to 6%, though it is moving closer to the central bank's 4% medium target. But just earlier, we had a conversation with Aditi Nair, Chief Economist at ICRA, over the impact of West Asia war on the upcoming CPI data. Let's go across and listen in.
See, the food number is a little higher than what we would have thought, but then the counterbalancing factor is that core is actually a little bit lower. So we're starting off going into the conflict in West Asia from a slightly lower core inflation than what we would have, what we had projected before seeing these numbers. So it's an interesting sort of mix. Of course, everybody has been saying the same thing. I'll just end up repeating it. The duration of the conflict is what really is going to determine the numbers for this month, this quarter, and the year ahead. So, you know, there's a lot of ranges that we're working with in terms of what could be the impact on growth, on inflation, on the current account deficit, and on the fiscal deficit for every sort of $10 average increase in crude oil.
Moving on then, as the fertilizer industry faces disruption due to the LNG supply crunch, sources say that government has reached out to China to ease export restriction in connection to urea. My colleague Prakash is now joining us with the details of this.
Well, government is making efforts to ensure sufficient availability of urea in the domestic market ahead of the Kharif season. In fact, sources are indicating that the government has sought Chinese cooperation to allow the sale of some cargoes in view of West Asia crisis. That's an important development coming in at this point of time. In fact, efforts are being made to offset the shortfall in production due to reduced gas supply to gas-based fertilizer plants. In fact, you are aware about the fact that the government has reduced LNG supply to the fertilizer sector, which has been reduced to 75% of their total consumption due to force majeure announced by Qatar Energy, followed by some Indian firms. And therefore, India has urged China to ease export restrictions amid supply-related disruptions as a backup plan. In fact, several other global sources are also being contacted for fertilizer imports. Sources are also indicating that a high-level committee has reviewed the gas supply situation to the fertilizer sector, and efforts are being made to ensure sufficient supply of gas to the fertilizer, gas-based fertilizer plants. However, government has also reiterated that it has sufficient stock of fertilizer at this point of time, which is roughly around 70.7 MMT to meet Kharif-related demand.
Thank you so much, Prakash, for all those details. But moving on to another story then, and bond market traders say top-rated insurance are beginning to pull back from the debt market as borrowing costs climb sharply. At least 3 issuers have withdrawn planned rupee bond sales this month amid a surge in the yields triggered by geopolitical tensions in West Asia. My colleague Anurag Joshi joins in with more details. Anurag.
3 company issuers have withdrawn their rupee bond issuance this month. NABARD withdrew an up to 8,000 crore rupee issue on Thursday. Power sector lender REC scrapped up to 3,000 crore rupee bond sale. Both firms had sought bids on NSE's electronic book platform. The step follows a surge in rupee debt yields from the fallout of the West Asia conflict. SIDBI had withdrawn an 8,000 crore rupee bond sale on March 4th. The yields on 3-year AAA rated bonds are up 21 basis points in March. Similarly, yields for other top rated borrowers are also rising. For those with a AA rating, it's 3-year tenor, it's up 27 basis points, and 1A rated bonds are up about 20 basis points. Crude prices have surged in March following the blockage of the Strait of Hormuz, which is a major supply chain, and it's become a choking point now for the movement of crude. Crude prices crossed $100 a barrel mark on Thursday. The rise on crude prices raises inflationary expectations, and this impacts the rupee debt yields.
All right, moving on, and let's bring you from the primary markets then some news. NSE has appointed 20 banks ahead of its proposed IPO. Anurag Joshi is joining us with more details of the story.
The National Stock Exchange said today that it has concluded the process of selection of intermediaries for the proposed IPOs. NSE has appointed 20 banks to manage the initial public offering. These banks include Kotak Mahindra Capital, JM Financial, Axis Capital, IIFL, Motilal Oswal, ICICI Securities, and SBI Capital Markets. NSE's IPO is one of the most watched IPOs this year. And this is also, the banker's appointment is also happening at a time when the markets have been edgy due to the tensions in West Asia. NSE further said that the engagement of Rothschild as the process advisor for the selection and appointment of its IPO banks has ended.
All right, thank you so much for getting us all those details. But with this, time now to slip into a very short break yet again. Don't go anywhere. We'll be right back with more on the other side. Welcome back to Market Cafe right here on ET Now. And let's put the spotlight on the auto industry because of late they have been struggling with respect to the natural gas supply, and with the concerns regarding the supply issues. Yes, of course, the West Asian war and the tensions right there, that's the main factor to blame for. But amidst this, ACMA has actually written to the Heavy Industry Ministry amid the gas supply disruptions and flagging of concerns that these disruptions can definitely weigh heavy on the production. What ACMA is actually highlighting that the gas supply disruption has already hit some of the component clusters, especially from the likes of Pune, Nashik, Gujarat, as well as Chennai belt. They have been impacted the most, and what we understand is that some of these clusters and OEMs are not receiving the gas at all, and the rest are receiving in a very limited manner. ACMA has also highlighted that specific segments within the production chain of the automobile, they are heavily dependent on the gas supply. Be it the case for forgings, they need a lot of gas, and switching to another energy source at this point in time, that is not feasible in such a quick manner. Add to that is the paint division. For the paints to happen and for that to dry up, the gas is required in heavy quantity, and if a disruption is happening with respect to gas supply, then that means that the whole production line will get impacted. And that is the other concern that ACMA is highlighting. Add to that is the surge in the raw material cost. That's aluminium scrap that we import from Middle East. That has completely halted right now. There is a shortage indeed, and what all supply that they are getting, that is happening at quite an elevated prices. So that is putting some pressure. There are exports concerns as well, wherein export order fulfillment is turning challenging, and especially with respect to the US customers. ACMA sees the clarity and the visibility on the gas supply from the government. We also did some of the channel checks from the Pune OEMs, and where we understand that the gas supply is very, very limited at this point in time. And yes, the production is getting impacted right at this point in time. So off late, we have already seen the OEMs getting battered, but auto ancillary companies, the channel checks are suggesting that they might be impacted more than the OEMs. But we also spoke with FADA as well on this particular issue. So let's go across and listen in what Sai Girdhar, Vice President of FADA, has to say.
As on day, we're not seeing any impact overall as far as supplies are concerned. There's no disruption. There is no shortage of supplies from the OEMs. Though the stock level has reduced as far as passenger vehicle is concerned, but overall, as of day, there are no signals that there is any supply shortage or there is any curtailment of production from the OEM side. Though probably we are watching the situation very closely, we're monitoring it on a day-to-day basis, because we understand that if this thing prolongs, then there might be some disruptions in supply chain. But as of day, we don't see any disruption today.
And well, the telecom tariff hikes, which the street had expected around the listing of Jio or Reliance Jio, may now face some delays. One key factor being the uncertainty over Jio's listing timeline. Ashisha is joining us with more on this.
Well, yes, telecom sector will continue to remain in focus until Reliance Jio gets listed on the bourses. Remember, earlier the expectation was that telecom sector will undertake a price hike before Reliance Jio's listing, which would mean higher valuation for Reliance Jio, and that would perhaps be followed after the listing as well. So that was the expectation that the street was working with. But remember, Reliance Jio's IPO is likely to get delayed beyond July 2026 rather, and that was the earlier timeline that Mukesh Ambani had stated in its AGM last year. Remember, Reliance Jio wants to come up with an IPO with a free float of just 2.5%. Currently, SEBI norms require minimum public shareholding of about 5%, minimum public offer of 5%. SEBI has come out with a proposal to reduce that down from 5% to 2.5%. It was proposed 6 months back, but the official notification for this has not been released so far, and that is the reason Street now expects Reliance Jio's IPO to be delayed. And as a result of this telecom hike that the street earlier expected before Reliance Jio's listing and after Reliance Jio's listing is likely to be delayed as well. Another reason is inflation. Remember, telecom players usually don't undertake a price hike at a time when inflation is a concern in the domestic economy. And on account of rising energy prices and rising oil prices in the global market, inflation is expected to be on the higher side. And that is the reason perhaps these telecom players will not be able to go ahead and undertake a price hike. So two primary reasons why telecom price hikes could be delayed, and it could affect not only Reliance Jio but also Bharti Airtel and Vodafone Idea within the telecom sector.
All right, Shesha, thank you so much for joining us with that. The rising West Asian tensions, let's talk about that, which are adding a new macro financial risk for India's banking system, according to Citi. The brokerage says private banks remain best positioned to navigate volatility, naming HDFC Bank, ICICI Bank and RBL Bank amongst its top picks. Mithali is joining us with the details of this note. Let's take a look.
Hi, good morning. So Citi says that rising tensions in the Middle East, they have added a new layer of macro financial risks for the Indian banking sector. And according to Citi, private banks, they demonstrate superior performance characteristics followed by the PSUs and then NBFCs. According to the brokerage, it says that private banks are best placed to navigate the volatility given their stronger balance sheets and also future earning visibility. Its top picks include HDFC Bank, ICICI Bank and also RBL Bank. Citi adds that private banks, they offer a better risk-adjusted offerings for re-rating opportunity as many are trading below their long-term valuation averages. However, sectors sensitive to the energy prices, including the fertilizers, chemicals, aviations and logistics, they could face some pressure if the crude prices stay higher. Export-oriented companies also may see higher freight and insurance costs amid the trade disruptions. Meanwhile, the rising geopolitical uncertainty could also push the bond yields higher and funding costs higher, while the PSU banks they remain more vulnerable to MTM losses and also on the bond portfolios. Citi cautions that while the working capital demands may rise in the near term, a broader economic slowdown could also weigh on the overall credit growth for India. Back to you.
All right, Mithali, thank you so much for joining us with that. But let's move on. Amid the rising tensions in the West Asian regions, the world takes a look at their renewable capacities to cut dependence on crude. Karan is now joining us with more on that. Take it away, Karan.
Well, let me begin by quoting the United Nations Secretary General. The sun is rising on a clean energy age. Quoting Elon Musk, we know we will run out of dead dinosaurs to mine for fuel. So why not go renewable now and avoid the increasing risk of a climate catastrophe? The President of the European Union once said, homegrown renewable generation with a battery base load is the fastest and the most cost-effective pathway to meet Europe's climate needs. On that note, global leaders have increasingly emphasized the transition to renewable energy, framing it as an economic opportunity and a key to sustainable development. Referring to COP28, over 130 countries pledged to triple the global installed renewable capacity to 11 terawatts by 2030. And China has already surpassed its original 2030 goal of 1,200 gigawatts of wind and solar capacity. Let's take a quick look at some of the global policy measures, starting off with feed-in tariffs, followed in Germany and South Africa. Now Germany used feed-in tariffs to become a global leader in wind and solar energy. Under this mechanism, governments mandate utilities to purchase renewable electricity at a fixed predetermined price over a long-term period, and this gives financial stability for small-scale and decentralized producers. Followed by renewable purchase obligations, these are also called as quantity forcing mandates. Under this framework, the government requires utilities or electricity retailers to ensure that a minimum percentage of the electricity they sell comes from renewable sources. And as far as the geography coverage is concerned, this is followed in India and 30 states from the USA. And finally, we have net metering that is primarily used to encourage distributed energy in the form of rooftop solar. It allows residential and commercial consumers who generate their own electricity to export surplus power back to the grid. Eventually, the consumers only pay for the net energy use, and this policy has driven a boom in rooftop solar across Netherlands, Japan and Brazil. Talking about India, India has added more than 52 gigawatts of power capacity in the first 10 months of this financial year. And out of this, close to around 80% was added from renewable sources. Now, as far as the Indian landscape on renewable energy is concerned, it is categorized into various buckets like the power generation bucket, which comprises the independent power producers, followed by the manufacturers, EPC players and the transmission networks. On that note, a question remains. Are these geopolitical conflicts and the consequent impact on supply chains accelerating the need to adopt renewables at a rapid pace?
All right, with that, it's curtains down in this edition of Market Cafe. I'll take your leave. Thank you so much for tuning in. Don't go anywhere because the market will take all the market action forward.